really expecting the big downside to come in the second half. And my case for that, my thesis for that is that it'll come when the market finally is recognizing that a recession is on the horizon. And the way they're going to recognize that is we're going to finally see the jobs numbers really start to crack. Right. So if you look back at the ADP jobs number, it came in a little less than expected. We've seen non-farm payrolls, continuing claims a little bit higher than expected. It's starting to crack, but we haven't seen it to the extent that the markets are getting scared yet. I think by the second half of this year, absolutely the market comes to that realization. Then all of a sudden, now that once a recession is the norm, you have to see repricing of assets like an Apple, like a Microsoft, like even a crypto to get down to levels where it makes sense. And this goes back even 10 plus years prior, where we've always been in a market. We are kind of a drug addicted market where we've always got new drugs from the Federal Reserve if there's any hardship, aka 2018, the Fed started to raise rates. Before you knew it, the market freaked and they were cutting rates. All right. So the market is kind of in this phase of they say, hey, listen, even if it gets a little rough, we're going to be rescued. Everything is always about the government, the Federal Reserve rescuing us. So let's just keep going in. Why would we believe anything else? And you can't fault people for thinking that way. They've been conditioned to think that way. But to be honest, that was when inflation was lower than 2%. I'm skeptical that we're going to get the same sort of bailouts that we saw in the next period. And again, I do think that a recession will come and the market is not prepared for it.
Hey everyone, and welcome back to the Daily Crypto. Today, we will discuss one of the most pressing topics of the year: how the 2023 recession may affect everyone's earnings, including crypto and Bitcoin. The global economy has not fully recovered from the COVID pandemic, and many experts have been predicting a recession for some time. And now, as we find ourselves in the midst of it, it's essential to understand how it may affect risk assets. For the past few weeks, retail investors turn more to Bitcoin as a safe haven asset in times of economic uncertainty due to the banking crisis, job cuts, and earnings decline. Thanks to these events, Bitcoin has seen its price rise to around $30,000 by the time we're recording this video. But even though it's been a good year for BTC, making it the best performing asset in 2023, we know that it still has yet to detach from the S&P 500 and macro entirely. So when a more substantial recession affects the global economy, many investors liquidate their crypto to cover losses. According to Gareth Soloway from InTheMoneyStocks.com and VerifiedInvestingCrypto.com, markets will crash even hard by year-end, and everyone needs to prepare for this downfall. The real question now is how Bitcoin and crypto will be able to create a new bull run with all the pain and blood in the streets. So let's see what Gareth Soloway has to say about all this, including his analysis of the Bitcoin chart.
So as of now, anyways, Bitcoin remains just underneath a major technical level, this 30,500 level. We've hammered on it. We can see, in fact, on the chart right here, lots of resistance. We've tried to push above it. Each time we're failing, at least at this point. Yesterday, we pulled back pretty sharply and then rallied back today as there's kind of a risk-on attitude back in the market. But the bottom line is this 30,500 level. Number one, it's an even number. So it's anytime you get above a 30,000 or a 40, there's always going to be a tendency to get kind of the last people in the trade, which weirdly enough is not the best thing, because once you get those last people in, you don't have a lot of new buyers. And so I think that's what's happening here with crypto. We're into this level where if we zoom out, this was the low from the 2021 bull market cycle. And it was also the low right here. And we've basically done a round trip. And I know I have a lot of lines on the chart, but we've done a round trip from that breakdown, which occurred in June of 2022, all the way back to where we are right now. So again, if we look back here, and again, this area here to here, that's where we're hammering on right now. And to me, that's a huge psychological level. And it's also a level where it will pivot me into thinking that the low is in. If we successfully hold above 30,500 for multiple days, I'm really looking for 5 to 7 days, then to me, you probably do have a low on Bitcoin in. As of now, I'm not convinced of it. I still think this is a bear market rally. I still think there's more shoes to drop in the risk asset market. So 30,500 is the technical level, so it needs to stay for 5 to 7 days above that level. on a daily basis above that level. We're now just above it for the first day again. So it resets every time it comes below. So yesterday we closed in the 29,000 range. It must stay above. And one of the reasons why this is so important, people say, well, why does it have to stay above for X amount of days? Because algorithms and institutions want you to think it's broken out. I've seen this on charts of stocks, commodities, crypto, where they're trying to get you to trigger long so that you buy and they can unload their position. So the longer it stays above, the harder it is for them to utilize capital to push it back down at a certain point in the future. So that's why it's important that it stays above for a certain amount of time. So ultimately, right now, we're basically back to day one here. Let's see if it closes above, and then we'll go from there.
Did this rally change Gareth's mind about Bitcoin still being in a bear market?
No, the rally hasn't really. I mean, again, if we look back at the bear market of 2017, well, 2018, 2019, I mean, we had rallies from 3,500 all the way back to 10,000 and then back to 3,500. So you've had these bounces in Bitcoin that have actually even been bigger than what we're seeing here. We're just up around 100% or just under 100% versus back then it was 200%. So I think we have to keep that in mind. I also think that if you look at what the Fed has said, you have to be very careful here. So we do know that the SEC continues to sue and kind of put down regulation or the beginning structure of regulation in crypto. And then the Federal Reserve just came out recently and said, hey guys, we expect a slight recession. And if you're anyone like me and you hear slight and the Fed saying slight and they said transitory and we saw what happened, you have to be nervous about risk assets in the future. And that's where I am. I honestly think that stock market's getting ready to have a second half that is going to be atrocious. And my guess is it drags down crypto as well.
And this takes us to the S&P 500 and how the macroeconomy is dragging crypto down, according to Gareth.
For the most part, for instance, JP Morgan, Bank of America, some of the bigger banks, they were a recipient of money flow, obviously, from the crisis, the banking crisis, from regionals. They're able to hold up in the face of a lot of this stuff. So there's going to be pockets where they're going to do okay. But overall, I think when you go to tech earnings, like Apple's going to be really interesting to me. We've heard some warning signs from Apple over in China and so forth. Remember, when people start to get a little bit behind on bills, and for instance, I just read an article talking about how there's a huge lag now. People are behind on their auto loans significantly. So when you come to upgrading your iPhone to the next cycle, are people going to start to just choose to wait 6 months? That could be a massive impact to the earnings on Apple. All right, same thing with Tesla. If money starts to get tight, I mean, we've seen Tesla cut the price of their cars, 5 times in the last month or two. There's a reason that's happening. Number one, competition. Number two, people aren't running out to spend the levels of money on a Tesla that they were a year ago or so. So there are signs out there. You could talk about job cuts at Amazon. You could talk about job cuts at Google. There are signs that Wall Street, these big players, are starting to tighten their belts. To me, that's an indicator I need to be careful as an investor. Again, you have Jamie Dimon, who runs basically one of the biggest banks in the world, and he's telling you this is not over, yet the markets are like, nah, it's over, no big deal, let's keep buying the S&P 500.
Or the market just thinks he's a liar. The market just might think he's a liar.
I mean, maybe that's what it is. But one of the things I would show people is look at the KRE. All right, if this is over, why is the KRE, which is the regional banking ETF, having literally no bounce here? I mean, this is, to me, a classic case of a bearish chart pattern, and that's got to be very concerning, the fact that the regionals still are not getting a bounce, especially when the Fed basically came out and said, hey, or the government said, hey, we'll make sure that depositors don't lose money, all these things. You even got a bunch of the big banks to put a ton of money in FRC, and here we are. The banking ETF for the regionals is basically at its lows. So there are things cooking here that, to be honest, right now, I would be shocked if we have not dropped significantly within the next 3 months in this stock market, in the S&P, in the NASDAQ. So I'm really expecting the big downside to come in the second half. And my case for that, my thesis for that, is that it'll come when the market finally is recognizing that a recession is on the horizon. And the way they're going to recognize that is we're going to finally see the jobs numbers really start to crack. Right. So if you look back at the ADP jobs number, it came in a little less than expected. We've seen non-farm payrolls, continuing claims a little bit higher than expected. It's starting to crack, but we haven't seen it to the extent that the markets are getting scared yet. I think by the second half of this year, absolutely the market comes to that realization. Then all of a sudden, now that once a recession is the norm, you have to see repricing of assets like an Apple, like a Microsoft, like even a crypto, to get down to levels where it makes sense. You have a series, right, where we just went through this period of 2020 of COVID all the way through 2021, almost to 2022, where the markets, and again, this goes back even 10 plus years prior, where we've always been in a market. We are kind of a drug addicted market where we've always got new drugs from the Federal Reserve if there's any hardship, aka 2018, the Fed started to raise rates. Before you knew it, the market freaked and they were cutting rates. All right, so the market is kind of in this phase of they say, hey, listen, even if it gets a little rough, we're going to be rescued. Everything is always about the government, the Federal Reserve rescuing us. So let's just keep going in. Why would we believe anything else? And you can't fault people for thinking that way. They've been conditioned to think that way. But to be honest, that was when inflation was lower than 2%. I'm skeptical that we're going to get the same sort of bailouts that we saw in the next period. And again, I do think that a recession will come and the market is not prepared for it. I would expect by year end, maybe 3,300 on the S&P 500. Early 2024, you're talking 3,000, and eventually it could be even worse than that. But right now, let's stick with 3,300 and 3,000.
Do you agree with Gareth? Are markets crashing harder in the upcoming months? And can it really drag crypto down? Or will it have what it takes to survive and thrive in this bear environment? Let us know your thoughts in the comments below. And if you want more content like this, please leave a like and subscribe. Thanks.